Hi, this is Krista Murray, Senior Vice President at California Wealth Transitions. Here at California Wealth, we find that our clients often want to make a difference in their communities. They recycle, they volunteer, they give to food banks. The good news is that now our investors really can have their cake and eat it too. How? Well, today we are going to talk about a topic that is getting more and more attention these days: sustainability investing, or ESG. To help us do that, we're calling on one of the experts, investment strategist Isabelle Williams. Isabelle is a native Californian who now lives in Austin, Texas, where she works for our good partners, Dimensional Funds. Welcome, Isabelle.
Thanks so much for having me. Excited to be here.
Well, we're happy to have you. Why don't you go ahead and start us off and talk a little bit about sustainability investing in ESG?
Absolutely. Well, I'm excited to cover this topic because it's one of my personal favorites. I think a lot of us are looking for ways to be green, to be responsible in how we live, work, buy, and now invest, really. And this is a great opportunity for people who are investors and want to bring this type of responsible approach to their investments, as well as other parts of their life. But I find when we talk about sustainable investing and ESG, a lot of people get caught up on the jargon and all the terminology that gets thrown around in the financial media around these topics. And so I thought to start things off, I would just define a couple of key terms that we're going to be using today, because the good news is you don't need to know all these topics to be able to take a successful sustainable investing approach. So let's talk a little bit more about what ESG, this acronym we've already used a few times, and sustainable investing are and how they relate. So ESG is an acronym that stands for environmental, social, and governance. And when I think about how to use this acronym, what investors really need to understand is this acronym just gives us a framework for understanding the different types of non-financial information that we may care about a company. So if we think back to what investors back in the day, even today still, of course, would care about for a company, a lot of the terms and things they would care about are really traditional financial concepts: profits, loss, debt, these things that are very important when considering investments, but they don't necessarily paint a holistic picture of the company. Environmental, social, and governance, this acronym really gives us a way of organizing the other important types of information about a company that I may care about, particularly if I'm a responsible investor looking to do sustainable investing. And so we have these categories like environmental, which can include things like how a company may be negatively impacting the environment. Maybe they're responsible for an oil spill. Maybe they have high emissions. Maybe they actually are innovating effectively to build green technologies for the future. You know, we can get both the positive and the negative side on all of these things. We go to this social part of the acronym. Social issues that impact a company are very wide ranging. They could be things like labor relations. They could be companies' diversity practices. All sorts of things can fit into this social bucket. And then finally, we have this governance aspect. And I think governance can be really the unsung hero of ESG, because it's really about how responsibly and effectively a company is being run. Who sits on the board of directors? Are they the right people for the job? Are executives being compensated in a way that's fair and not exorbitant? These are important foundational aspects of guarding shareholder value that investors care about. So we've just listed a few things that could fall into this ESG bucket here. But when we talk about what sustainable investing is and how it relates to ESG, I think what sustainable investing really is about pursuing good financial experience, a good investment outcome, while also pursuing an environmental or social or governance outcome. So really, ESG gives me a way of identifying what sort of non-financial, non-investment motivated things I would like to pursue with my sustainable investing approach. So this allows me to pick maybe environmental goals or even social goals that I might want to pursue with my sustainable investing approach.
Yeah, there seems like there's a lot here. Can you tell me where some of the areas of focus are for companies that we're looking at in ESG and sustainability?
Absolutely. There is so much that can go into these different buckets, to your point. The list could go on and on and on. And as investors and as people who need to sometimes put down the headlines and get some sleep at night, we need to be focused in what we decide to care about when we do sustainable investing. And when I look at the types of topics that Dimensional is talking about when we reach out to companies that we invest in on behalf of our clients, you can see here some of the top topics that have come up over the past few years when we engage with companies about which significant ESG issues are really material to their business and things they care about. And you see a couple of key themes here: climate change, very environmental issue, and then items like human capital management, that's, workforce management, labor considerations, really important issues to companies, not just from how investors and consumers are perceiving them, but in terms of how they think about risks and opportunities in their business. If you're a company planning for the future, you have to think about how these environmental and social issues impact your business now and in the future. And you can see a broad range of issues are certainly coming up when we talk to companies that we invest in.
So obviously climate change is number one. Can you expand on that a little bit? It's getting a lot of attention, both here domestically and internationally as well.
Absolutely. Climate change is certainly top of mind. I think we see this both in how when we talk to companies and when we talk to advisors and clients about what in the ESG world they really are. They're caring about, they're thinking about what they might think bubbles to the top of that ESG list for things they might want to pursue in their sustainable investing approaches. And, I think at this point, this story is well known to all of us, and we've all seen these charts and these ideas that really climate is warming, and more impactfully for many of us, we're seeing major weather events, wildfires. We're feeling the impacts of climate change today, and we're hearing from scientific community the challenges that lie ahead, and certainly both from an investor perspective, but also in policy conversations, where and how we can deal with these issues and really address the fact that we're seeing emissions continue to rise. And we know that these human-caused emissions are the leading driver of that temperature increase. And so for investors who care about this issue, Dimensional spends a lot of time working with the scientific community to understand what is a way we could reflect those values, that concern about climate change in an investment strategy. Because again, the idea with sustainable investing is to reflect your environmental or social preferences in your portfolio while still pursuing a really good investment experience. So this isn't exactly the same thing as, say, charitable giving, where you're just looking for that green impact, say. We also need to balance that with your financial goals. And so we really look to the scientific community to help us identify what data we can use in an investment approach to build in some of those environmental preferences. And what we're looking at right now is the uptick in emissions over time. And we'll talk about this a little bit more, but really this focus on emissions guides a lot of how Dimensional thinks about investing in this space, because we know it's such a foundational issue for climate change. And what this means is when we look to the science and they point us to look at emissions as the root driver of climate change, we can build an investment strategy that incorporates emissions data for companies across the world. And we can look at ways to reduce exposure to those companies' emissions in our investment approach. And we think this gives investors an opportunity to pursue those long-term investment goals that they have, while also having a really low carbon footprint in their investment portfolio. So they can essentially seek to lower their emissions exposure while still pursuing higher expected returns over time. Now, that all sounds, I think, really, that sounds like a nice idea. This idea that I could have a low emissions investment portfolio while still having good returns, solid risk management, all of those things that investment managers like Dimensional need to think about. But how we bake in an emissions focused approach to an investment portfolio can get pretty complicated. For today, I wanted to show you some of the types of data that we consider when we build clients' sustainable focused investment portfolios. So because we know climate change is of primary importance to many investors and to scientists everywhere, and that we know that emissions is the leading driver of climate change, when we look to evaluate companies on ESG issues in a sustainability fund, we're going to focus on companies' emissions profile. We're going to look at how much emissions they are putting out into the atmosphere. We're going to look at what type of fossil fuel reserves they have that may lead to potential emissions in the future. We're going to consider basically how the companies are contributing to that emissions problem that we're observing. And then we're going to also evaluate them on a select set of other issues that we know matter to many sustainability focused investors. And again, this is something that we're adding on to the financial considerations that we give. This is bringing that sustainable goal to a robust investment approach. Anything on this page, Krista, that you want to dig into a little more? You have any questions on?
So thank you for explaining climate change. That's really helpful. And while I understand that it's a big focus, I'm drawn to this column on the far right, kind of down toward the bottom, and mentions child labor. As a mom and a grandma, something like that really is important to me to better understand how we can make a difference as investors. Could you expand on that a little bit?
Yeah, absolutely. When we talked about ESG, I think you mentioned, Krista, and I echo that there are so many different types of issues that people might care about, and they are all important. You know, climate change is certainly significant and at the forefront, but there are many other types of environmental and social issues that it's very valid for people to care about. When we build these strategies, we try to balance being focused on things that we can measure and that really can be compared well across companies around the world, with bringing in these really important issues that investors care about. And when we think about something like emissions, which I've talked a lot about, it's all a spectrum, right? It's hard to paint what's really good, what's really bad, good, evil. It's a spectrum. We are all responsible for emissions in our daily life. That's how society works today. So we take a much more balanced approach. We look to emphasize companies that are doing relatively better versus companies that are doing relatively worse. There are other sorts of environmental and social issues that are a lot more black and white to investors. So we look at something like child labor. And for many investors who are considering a sustainable approach, they are not interested in investing in companies with known significant child labor practices. It's a more black and white issue to them. So in a fund that's focused on something like emissions, we still have the flexibility to go ahead and exclude companies that have had significant known child labor controversies. I sort of think of these as finishing touches we can put on a portfolio that's pursuing an emissions focus to help them align better with what investors care about and to avoid some of those more black and white issues that we know people don't want to have in their investment portfolio.
Well, that sounds great. Now, as an investor, what are some of the concerns that I should have as far as to how the portfolio is constructed and returns, that type of thing?
Absolutely. I think it's always important as an investor. And one of the really important reasons I think for working with an advisor, if you're considering sustainable investing, is because you do need to put on you kind of need to put on that skeptical perspective and think about what the trade-offs are, because life is full of trade-offs. And, if something sounds too good to be true, it might very well be. And so it's important to think through what are the trade-offs in this approach. And I'm showing here in the past survey, Dimensional has done some surveys with advisors to hear what their hesitations are about sustainable investing. And I think these are really important things for everyone to think about. Do I have the types of options I need? Can I invest in both equity and fixed income? Can I really understand what's being done? Is this just a green label? I don't know about you, but I have that experience as a consumer quite a bit, where I see something is being sold as green, but I have trouble understanding what that is. And I think it's really important to work with an advisor who can help you understand what it is and what it isn't, because there is so much that goes into that ESG bucket, and no investment approach is going to be able to do all of it successfully. So you're going to get some of the things you might want, and then you're going to have to understand what you're not getting. You mentioned performance, and I'll add to that fees. These are always important topics to look at and consider with an investment professional like your advisor. What are the fees that are being charged? We believe a sustainable investment solution should be cost effective. It should not be exorbitantly expensive. It's again focused on delivering that solid investment experience, and performance is a huge part of that as well. You want to make sure that whatever sustainable investment approach you pick is grounded on a sound financial basis, because this is, like I've said a few times now, about pursuing both financial objectives and sustainability objectives. And you don't want to let those financial objectives go out the window just because you're really passionate about the environmental and social stuff. It's an incredibly important piece of it, but it's not the whole picture. So those are some great examples, I think, of what people should be thinking about when they have conversations with their advisors about doing something like sustainable investing. And I know we've already kind of packed a lot in, but with that in mind, I'd like to give a couple of summary comments for the sorts of things I think investors should think about and talk about with their advisors, because this is an awesome opportunity that's now available out there. But you need to think through your personal situation, what your priorities are, and your advisor can help you do that, certainly. So when you sit down to think about doing sustainable investing, I'll say it once again, remember the financial and investment objectives you have. You want to start with a really sound investment foundation. Even if your strategy is going beyond and seeking environmental and social outcomes, you still need to make sure that financial basis is there, and your advisor can help with that. We think at Dimensional, because we can't do everything in the ESG buckets in every strategy, we think a great way of focusing our attention on behalf of our investors is to work with scientists and focus where the science tells us we can have the most impact. And that's why we focus on climate change. But we think the important thing is to make sure you have a focus for a good reason, because you can't try to do everything at one time equally effectively. And that really allows you to know what environmental or social goals you can expect with your portfolio. We talked about this idea of something being labeled green, but not necessarily knowing what that means. I think that's part of understanding and selecting a sustainable investment approach. You should know what the outcomes are going to be in the environmental and social realm, just like you have an idea of what the financial goals are. At Dimensional, because we're targeting lower emissions exposure, this means that we're going to provide emissions exposure reporting to investors to consider how our funds have performed relative to their sustainable goals. And this sort of reporting becomes part of how you consider your financial experience. Just like you sit down and look at some of your investment outcomes, you can now look at your environmental or social outcomes. So these are some of the things I think it's really important for investors to have a conversation about, because this can be an incredibly exciting opportunity and a great way to engage a little bit more directly in your investment experience. Anything you would add, Krista?
No, I think that is very helpful. Thank you so much, Isabelle. We really appreciate your time and knowledge today and sharing that with the folks watching this webinar. If anybody has any questions or wants to talk about sustainable investing or ESG investments and how that works into your portfolio, feel free to talk to one of our advisors. We're here to help. Thank you so much and have a great day.